Thanks for tuning in. Please like and subscribe as well as leave a comment below. In today's video, we will continue our series on financial literacy by covering some of the basics of investing. Hope you enjoy and learn something. Financial literacy, basics of investing. Do you ever feel overwhelmed when thinking about investing? It might seem like a complex topic that can be difficult to navigate, but understanding the basics of investing is critical to managing your money successfully. Learning how to invest is essential in creating financial stability and security for yourself and your family, which can lead to better peace of mind now and down the road. In this article, we will discuss the fundamentals of investing, from what an investment is and how it works, to different strategies you can use. We want everyone, no matter their age or income level, to have a better understanding so that they can begin building their wealth today. What is investing and why should you care? Definition of investing, reasons to get started. Investing is the practice of putting your money into a financial asset with the hope of generating profit or an increase in value over time. It is a way of growing your wealth and achieving financial security. Whether you're new to the concept of investing or have some experience under your belt, it is always advisable to start early. By investing, you not only increase your potential for financial gain, but also create a means of passive income that can sustain you in the future. Therefore, investing might seem daunting for some, but it is an essential aspect of financial planning and can be a fruitful endeavor if done right. Types of investments: stocks, bonds, mutual funds, exchange-traded funds, ETFs, real estate investing. Investing can seem overwhelming to those who are just starting out, but it doesn't have to be. There are various types of investments to consider, each with their own unique features and benefits. Stocks offer potential for high returns, but they come with a level of risk. Bonds, on the other hand, typically offer lower returns, but a higher level of safety. Mutual funds are a great option for those who want to diversify their portfolio, while exchange-traded funds, ETFs, offer a similar benefit with the added advantage of being traded like stocks on the market. Finally, there's real estate investing, which can be a lucrative option for those who want to build wealth over time. By understanding the different types of investments available, you can make informed decisions about where to put your hard-earned money. Different strategies for investing: the value investing, growth investing, index investing. When it comes to investing, there are several strategies you can consider. Value investing focuses on identifying stocks that are undervalued by the market and holding them for the long term. Growth investing, on the other hand, looks for companies that are expected to grow at a faster rate than the overall market. Index investing involves investing in a broad index, such as the S&P 500, to capture the overall market returns. Each approach has its strengths and weaknesses, and it's important to understand the fundamentals of each strategy before making any investment decisions. By doing your research and developing a solid investment plan, you can achieve your financial goals and build a strong portfolio for the future. Important financial tools: stock screens, brokerage accounts, financial calculators. When it comes to managing your money, using the right tools can make all the difference. There are several important financial tools you should consider utilizing to help make informed decisions and reach your financial goals. Stock screens offer a way to filter through the thousands of available stocks to find the ones that fit your investment strategy. Brokerage accounts provide a platform to buy and sell stocks, bonds, and other securities. And financial calculators can help you figure out things like loan payments, savings goals, and retirement planning. By utilizing these tools, you can take control of your finances and build a solid foundation for your future. Risk management strategies: diversification, asset allocation. When it comes to managing risk, diversification and asset allocation are two key strategies to keep in mind. Diversification involves spreading your investments across different asset classes, industries, and geographic regions to reduce your overall exposure to any one particular risk. Meanwhile, asset allocation involves deciding how much of your portfolio to allocate to different types of investments based on your risk tolerance, investment goals, and time horizon. By utilizing these two strategies together, investors can better manage risk and potentially enhance their portfolio's long-term performance. As you navigate the world of investing, remember to always evaluate and adjust your diversification and asset allocation strategies as needed to stay on top of changing market conditions. FINRA rules and regulations, the importance of compliance and disclosure. FINRA rules and regulations are the bedrock of investor protection in the United States. The Financial Industry Regulatory Authority, FINRA, is the primary body responsible for developing and enforcing these rules, which govern the activities of broker-dealers, investment advisors, and other financial firms. It is crucial for these firms to comply with FINRA rules and regulations to maintain trust with customers and avoid legal consequences. Additionally, transparency is of utmost importance when it comes to disclosure. Investors need to have access to clear and accurate information to make informed decisions. This is where compliance with FINRA rules come in. Properly disclosing all potential conflicts of interest will prevent investors from being misled or harmed. By adhering to FINRA regulations and practicing transparency, firms can build and maintain a strong reputation in the industry. Investing can feel intimidating if you don't understand the terminology, strategies, and tools. However, with the right introduction and knowledge on regulations, investing can become a powerful tool for building your wealth. The 6 main points discussed in this blog post, from defining investing to outlining different strategies, provide only a brief overview of the basics required. To further expand your understanding of the practice, it is important to research individual investment and make decisions about choosing a strategy that works best for you and meets FINRA compliance standards. It is absolutely possible to successfully invest in today's markets. All it takes is a little bit patience, education, and attention to detail. Thanks for watching. Please remember to like, subscribe, and leave a comment. Also check out our other videos in our financial literacy series. Till next time.